All right. Hey, everyone. Welcome to The Thoughtful Entrepreneur. I am your host, Jen Amos. And today I have with me the founder and CEO of Family Capital Strategy, David Wells. His website is familycapitalstrategy.com. Also, he's the author of the book, When Anything is Possible, Wealth and the Art of Strategic Living. David, welcome to the show.
It's great to be here, Jen. Thanks for having me.
Yeah, absolutely. It's a new year, so I thought I'd ask, how's 2021 treating you so far, David?
I don't know if it's people had a really relaxing time off, but it is like January 2nd hit and it has been nonstop. I feel like I've been busier in the last 6 weeks than I have in the 6 months prior to that. And maybe it's everyone's just tired of COVID and it's like life's got to move on, but it has been full steam ahead since the turn of the year for sure.
I love it. Normally, I am very quick to reply to like my friends and loved ones whenever they text me. But nowadays, I find myself messaging them days later. I'm like, oh my gosh, I'm so sorry. I didn't see this. I'm just busy, like I'm just so busy with all these Zoom calls. And at the end of the day, I'm just exhausted. Like, I don't want to look at anything screen related. And
Yes.
Here I am, like, it's a Friday night and I realize I have all these unread messages, but I agree with you. I mean, the start of the new year, even for me, has kicked off very quickly. And, with everything that's going on, I'm actually glad. I like to be productive in a time of uncertainty. So, I'm just counting my blessings that I have stuff to do.
Yeah, absolutely. I had a friend yesterday, you can give like a thumbs up on your iMessages. And so there's also like a question mark. And so he had sent me a text message a couple of days before that I hadn't responded to. And all he did was just send the question mark. So I got like a notification that it was basically the like, come on, man, like respond to this text message. And it's like, oh, I forgot. I completely, that was like, 15 messages deep at that point. But yeah, I'm totally with you.
Yeah, it's a lot. It's a lot of information. I think that because of technology and because of being stuck at home, we are more accessible, as odd as that sounds. And, thanks to technology. But again, anyway, I digress. Let's go ahead and move forward here, David. Again, really happy to have you on. I talked a little bit about, I mentioned your company name, Family Capital Strategy. And so let our listeners know, for people that are hearing about your company for the first time, what do you do and who do you like to serve?
Yeah, absolutely. So I'm very privileged to work with a pretty unique slice of business owners in the U.S. So I typically, so the business, what we do is we work just with families that own businesses. And so while that is the most dominant form of actual corporate ownership, there are more family-owned companies than non-family owned. Typically, I end up working in situations where you have multiple generations at the table, and so it could be like a founder and their children. Although I work with clients that are in the fourth, fifth, and sixth generation and beyond, where suddenly you end up with a really large group of owners. So anything, my largest client has, I think, 90 family members. So really complicated set of dynamics when you get that number of people. And what I end up doing is partnering with the family, where typically what happens is that as the business grows, it produces cash. And as that cash, some of it obviously gets reinvested to continue growing the business, but then over time, like that actually becomes almost a separate business. So the management of that wealth. And so what I do is partner with the family to help them think about how do they build a world-class solution around that, the management of those financial assets. And so that's typically known as what's called like a family office. But basically it is a private, it's almost like a separate company. It's a private entity that just helps the family manage the complexity of all its wealth. And so while I don't manage assets, which is a little bit unique, I'm not a financial advisor, I'm not an asset manager, I'm purely a strategist to help the family think about what it is they're trying to build with their wealth. And then what does the team look like? What systems do they use? What processes need to be in place? Who are they going to partner with? Because they'll have a lot of different specialized vendors for that. And so I'm kind of an architect that helps them then build that entity so that the family can maximize what it's trying to do with its wealth.
Yeah. Wow. I think that's definitely a fine niche to focus on. There's definitely a lot of family-owned businesses in America that have generations that have been working in it for a long time. There's some I could think of, but one might be really political if I say out loud. But anyway, I think about like the McCanns tell me a little bit about how do you juggle, these family dynamics? Because you mentioned one family you worked with, there was like 90 family members involved. Like, I can only imagine how sensitive it is to, kind of walk that, with the different generations of families involved with the business. Like, how do you navigate that?
Yeah, I think it is. And it's What's really interesting is that I think we all see in stories in the newspaper of like when the dysfunction goes awry, and there's an assumption that like that's somehow the normal case, the normal state of affairs for families. Like if you've
Hmm.
seen Succession on HBO, which is
Hmm.
the story of a family business where everyone is highly dysfunctional. And
Hmm.
generally, what I find is that like family businesses are just normal families. We all have the normal dysfunction in our family systems. Sometimes it gets toxic and the stakes are a little bit higher. But
Hmm.
really, I find that a lot of it comes down to what I try to do is to show trade-offs so
Hmm.
that when you've got multiple generations at the table, each with a different opinion about a point of view or a direction, is basically to lay out the case of, okay, if you go down this path, this is what that means when you play this forward 10, 15, 20 years. If you go down this path, this is what it means. So it's
Hmm.
trying to kind of desensitize or take the emotional loading out of the conversation so that you can have a rational conversation around trade-offs so that you go eyes wide open. I find a lot of times, not always, but a lot of times when it gets really loaded emotionally, it's because of implicit assumptions or implicit decisions that the family has made before. So if you could, it's kind of that old saying, like sunlight is the best disinfectant. Like if you could kind of bring things out in the light and then lay it out, then you could hopefully have a more objective conversation. Not always the case, and sometimes you have to build a framework to get to the conversation that you want to have.
Yeah.
But generally, if you lay out the breadcrumbs, the family can follow right along with that.
Yeah, and I imagine having someone such as yourself, David, you can be that third party, unbiased person that they can scapegoat if anything. Like if there is any sense of thing, it's like, oh well, David said that. Let's take it to David, as opposed to like the generations being like arguing amongst it. It's like they can come to you for that direction and say, hey, like let's look at the numbers, let's look at the facts, like this is how this can benefit all of you. Just being that middle person, I think, is very helpful, that I'm sure families really appreciate. Just like how you have an attorney review a will after a family member passes away, like rather than the siblings fighting over whatever is left, like you have a third party person like an attorney to be able to mediate that. And so it sounds like you sort of do that with generational wealth, also what it sounds like with these families.
Exactly the same. Yeah,
Hmm.
it's having a third party who can hear things that maybe don't get expressed otherwise, and then has the freedom to say things that maybe can't be expressed otherwise, simply because there's no skin in the game of like, I'm not going to be at Thanksgiving and Christmas for the next 25 years. Like I can be as objective as possible. And generally, like I kind of view my role as to be a thoughtful truth teller, so that the family hears what they need to hear, and then to be as in pursuit of what's best for the family overall.
Yeah.
I don't necessarily, I try not to get wed to one path of saying like, well, this is the path that it has to be done, because it ultimately has to be informed by what's important to the client. Like, what do they want to accomplish? What are they trying to do? But I want to make sure that they go into that really eyes wide open, so that they know that, okay, this may be suboptimal, and are you okay with that or not? I think that's
Mhm.
an interesting dynamic that I think a lot of us, as a business owner myself, and from my even professional background, like sometimes you make choices that are not optimal because they provide other benefits.
Mhm.
Whether that's, so it may not be the most profitable decision, or it may be the least efficient decision, but it allows greater value to be added in a different way. And so
Yeah.
again, it's just, are you aware of what you're doing or not? I think so many times, like we're all probably guilty of some of the best things that we do in life. It's not because we actually planned it; it's just because we like backed into it, or we kind of lucked into it,
Mhm.
which is great. But it's like, let's just make, but it's luck is not a scalable success strategy, right? Like if it
Right.
just happened once, like you can't guarantee that it's going to happen again. So better to double click in and figure out what actually happened in that circumstance.
Yeah. David, I imagine that, when you working with family owned businesses, you must have some clientele that you've had for a very long time, and seen maybe even their own growth within the family and, the growth of the business. Do you have any, favorite clients that you have in mind that you want to share with us, and how that relationship is like working with them?
Yeah. So first off, let me just say, like, I have like signed non-disclosure agreements with all my clients. So like, I
Yeah,
can't
you don't have
name
to name
names or
drop. That's
anything.
okay.
Yeah. But I think what's really, really cool, and and a real privilege is exactly that, which is to watch a family journey through things over time. Especially what's, and probably not surprising because like I have 3 kids, and I think every parent worries about how their kids grow up. And I think there's such a common dynamic of all families that are trying to figure out how to do something for a long period of time, of really spotlighting and saying, okay, for our it's called next gens, but that next generation that's coming into the family, how do we get them educated and launched and help them find their place? And what's really cool to see is even as those folks kind of come into the family system, they find their place, they find their voice, they develop some real expertise. Incredibly neat to watch how the human capital of the actual people of the family build and grow over time. And I think that's probably, honestly, I think one of the things that I love about the work that I do is that, most families typically like start to dissolve after 3 generations. Like you probably spend time with your parents, and if you have living grandparents, that's great. But then, it's odds are that, as your grandparents pass away, just that cousin generation, naturally, like you end up dispersed with different values and interests, and you may live all over the country and world.
Yeah.
And so to have a family business or a pool of family wealth that serves as kind of that, it gives the family a reason to stay together. If the family can then almost create like a social system where the family wants to be part of something because they get to interact with these really neat people, that's really cool to watch when the family does that really well, because it's kind of this, it can be a dynamic of mentorship, of friendship, of camaraderie that is, in a modern world that is really fragmented and siloed. I think we can all end up isolated, and maybe that's what we've all learned in COVID, is that like when we're all at home, it can be very isolating. And so these families that figure out how to stay together for 80, 100, 150 years or more, what a neat counterbalance to some of those forces that we see in the modern world.
Yeah, I think I find those kind of families who have sustained a business for generations. I think it's really admirable. And I like how you pointed out that after a lot of times these businesses only last for 3 generations. Have you worked with businesses where the next kin was like, I don't want to do this business. I don't want to carry on this legacy. And what was your approach to, I guess, make that transition for them to move out of the business or that sort?
Yeah, it's really interesting, and there's a common saying in the industry, and actually it's global, which is it's called shirt sleeves to shirt sleeves in 3 generations. So it's the idea that the first generation makes it, the second generation preserves it, and then the third generation loses it. And there's a whole bunch of reasons why that happens. What I find really interesting is that a lot of times, two things often happen. One is that the business itself may reach a point where it actually no longer makes sense to be owned by the family. So the industry changes, the business grows, and the family is no longer the rightful owner to it. And so there are a lot of families that I think would benefit by looking at the older families from Europe, or even some of the Southeastern Asian families that have been around for an exceptionally long period of time, that have recognized that if you can think about your business as a portfolio and say, okay, well, there's a time to own an asset and there's a time to sell an asset, but you can still be in business together even if the pieces change. And I think that's what you're seeing now is families that are coming to that realization. So that's maybe like the first set of families that decide to sell a business at a generational transition. Sometimes it's really for more business specific reasons. Exactly, though, there are a cohort of families where they reach a point where the family doesn't want to be in business together, and so they begin to kind of go their separate ways. And that's a very sensitive thing. Because of my work, I end up typically engaged with families that are wrestling with the how we stay together question. But I certainly spend time with and have gotten to know a number of families that have made the choice to go separate ways. And I think that if done thoughtfully can be a successful outcome. Like that can be a good choice, even if it feels like failure. What I think is what becomes really tragic is when you do see the families that in the course of coming to that decision, ultimately say like, the only way for us to negotiate this path forward is to litigate it out and to get the lawyers and courts involved. And then what happens is that you have people who are paid by the hour negotiating a conflict. And so generally, like just common sense would say like, the bigger the conflict is, the more hours there are available, and the more likely there's good fees to be had. And obviously, like, that's
Right.
a vast hyperbole about the state of lawyers.
Hmm.
But what it does mean is that the family stops talking to each other about its problems. They talk through their lawyers, and
Yeah.
generally, when that's done, it's really hard for the family to be a family afterwards.
Right.
I think
Right.
sometimes it's actually, if you can say, like, we've reached a point where we have different goals, and our vision of the future looks different, but we
Yeah.
still want to maintain some of those family bonds. A thoughtful separation can be a great way to make sure those relationships continue, even if they look different,
Hmm.
as opposed to, like, let's scorch the earth, we'll never see each other again. If that's like the deathbed regret of, like, oh, I wish we had patched this up. That's, I think, the worst case outcome. There's a
Yeah.
middle case, but it's like a well-handled divorce, right? There are some
Hmm.
couples that figure out how to do that in a way where they still are able to co-parent together and are friendly, and then there
Yeah.
are others where it is just like, they could live halfway across the country or the world, and that still wouldn't be far enough away. And that's, I think, ultimately ends up being a really tough place for the family and for the individuals.
Yeah.
Um,
Absolutely. Well, thank you for indulging me in that question, because
yeah,
I know that's not something you primarily want to focus on or work on. Even though it's available, you can do it. You like to focus more on keeping that family bond. And so, what is one maybe key advice, maybe a mantra that you sort of live with and stand by to maintain the family bond, not just like, especially beyond that third generation?
yeah. So my mantra has three parts, but it's the idea that really, to be successful for a long time horizon, you're balancing three things at the same time. So
Hmm.
you're balancing what's good for the individual, you're balancing what's good for the family, capital F, and then you're balancing what's possible with the assets that are available. And
Mm,
so the families that I think that are most successful, it is a place where each individual feels like they have the ability to live their own life,
yeah.
and to accomplish what's important to them, to have their dreams and see their realization. There is a degree of stickiness. There's a collective mentality where they say, yes, we want to do this together, and then they marry that with a financial approach to their business affairs. That the business, or if they've sold the business and it's just a big investment fund, so to speak, that it's the pursuit of the family goals don't ultimately deplete the assets.
Hmm.
And so if you can kind of balance that stool in space, like, then you've got a really great foundation for persisting for a long period of time. If any one of those ends up, getting more priority, like if it's too much focus on the individual, then the family falls apart. If the
Hmm.
family is too important, then individuals are going to begin to feel like they're in a straitjacket and that they're forced
Right.
into this thing. And that I heard somebody joke recently that that only works until about the age of 40. And then people have had enough, and it's something about middle age, and they're like, you know what, I can't handle the constraints of being part of this system.
Yeah.
And same thing with if you spend the wealth too quickly, like, it goes away.
Right.
And so that's the complex balancing act. But if you can keep individual, family, and the wealth in alignment, you've laid out a lot of rails or track that the train can run on, for a long, long time frame into the future.
Yeah, I really like that formula in a sense, making sure that the individual family member still feels like they can, be their own person. And then there's also that collectivist goal amongst the family, and then maintaining the assets as sort of the thing that they all do together with as an individual and as a family. I really like that. I never heard anyone describe it that way, but that's a really good thing to keep in mind, and something I'll probably write down for myself. Like, the stool of success is, being an individual, having your individuality, having the same, like, sharing collective goals with your family, and then also the money or the assets, maintaining that the assets together as a family. Very astounding. David, I know that you have a book. I mentioned this at the beginning: When Anything is Possible: Wealth and the Art of Strategic Living. Let us know what that book is about.
Yeah, so kind of a natural segue. So
Mhm.
the book is really about the first leg of that stool, which
Mm.
is about the individual. And my background, I've been in and around financial services for 15 years.
Mm.
I ran a hedge fund for a while, been a portfolio manager, and been privileged to work with wealthy families in a lot of different contexts. There's a lot of wonderful resources about the family.
Mhm.
There's a lot of wonderful resources about the wealth management piece of it. How do you do the investments so you are successful? What I found is that it's really hard to think thoughtfully at the individual, at the household level. What is it that you're trying to accomplish?
Hmm.
And especially with, as the wealth grows, which is kind of a natural consequence of being success. What's really sad is that there's a lot of wonderful surveys that would suggest that most people who have been wildly successful are not really happy with that state of affairs.
Mm.
There's a survey that talks about how that the majority of people who are kind of in the ultra high net worth, so think at least $25 million in net worth or above, they don't feel financially secure. There's another data set that says that 80% of people who have a trust fund don't view it as a positive presence in their life.
Mm.
50% of business owners, after they sell their business in the 18 months after that, say that they regret the decision. So it's
Wow.
this very odd state of affairs, right? Which is like, these are people that you would say like, oh, these should be the happiest people on earth that they've attained this financial success. But when you ask them, they don't feel like that's the case.
Hmm.
And so the book is really about how do you, as your wealth grows, and it's not really, and I think this is true regardless of if you've got $1,000 in the bank or $100 million or $1 billion in the bank. It's the same set of questions that are applicable. But it's really comes down to these three questions of, well, what do you have? And that includes your financial resources, but it also includes things like the relationships that you have, the social causes you care about, the education and skills that you've developed, the
Hmm.
legacy that you've inherited, and the values from the past, and even like your faith practice that
Hmm.
inform that. Those are all assets, and
Hmm.
we tend to focus on the financial balance sheet. We maybe don't give as much of. It's harder to quantify some of those other things, so they kind of fade into the background. So question number one is like, what do I have? Which I call like your wealth structure. What are all the pieces? The
Hmm.
second is what I call wealth identity. And it's really, okay, how do you answer the question, who am I and who do I want to be? And specifically with regards to your wealth.
Hmm.
And recognizing that like that question of who am I, like that is serious, thoughtful matter. But what we don't realize is that there are a lot of things that inform how we think about ourselves in relationship to our wealth. And
Hmm.
that could be where you grew up in the country. That could be your family of origin, and how, whether it was been wildly successful or if it was successful and then lost it all. There are messages that are coming into your upbringing and psyche about wealth that most of the time we never really think about. It's just kind of like, it's like the water that a goldfish swims in. The goldfish is not really aware of that water, but
Hmm.
it's dramatically affects the life that it's living. So
Hmm.
wealth identity, and then wealth strategy, which is okay, well, what do I do next? Like if I know what I have and I know who I am and who I want to be, well, then you can begin to answer the question of like, well, what do I do next? And
Hmm.
that's where a lot of times the focus runs to like investments or like managing taxes. Actually, but the book spends a lot of time talking about the really important things of, okay, how do you set a standard of living thoughtfully? How do you figure out how much you're going to spend? How do you figure out how much you're going to give to future generations? And then how do you figure out this philanthropic question of what's my responsibility to the community around me? And how do I do that really thoughtfully so that I'm actually helping people and not hurting them through my philanthropic dollar?
Hmm.
So the book is designed to be really pragmatic. It's written so that regardless of your background, you can read it, but it's designed to give you a process to think through those steps so that at the end of the book, your wealth is something that hopefully goes from being like either just dollars in the bank or overwhelming to like a tool that you can deploy to accomplish what's most important to you.
Yeah, I love that. I love that final note. It's like ultimately you're looking at your wealth as a tool to support like who do you want to be and what do you want to do next, right?
Absolutely. And I think that's what the world needs now, right? Is people who are dramatically aware of what their own capabilities are, and then how they can make a difference in their community, right?
Yeah,
Like
yeah.
this year we have seen some horrible suffering for all sorts of reasons. And if we can create a place where each person is living a fulfilled life and then is using that to impact their family and their community around there, I'm pretty sure that makes a world that's going to be a lot better to live in 20 and 30 and 40 years. And it will address a lot of not all of, but a lot of the issues that I think that we've seen an acute spotlight put on in the last 12 to 15 months.
Yeah, absolutely. I think just that sense of purpose and fulfillment can solve a lot of problems. I absolutely agree with you on that.
Absolutely.
David, it's been such a pleasure having you here on The Thoughtful Entrepreneur. Any final thoughts before we go?
No, this has been great, Jen. I really appreciate the time. If folks are interested, you can visit my website, familycapitalstrategy and .com. And yeah, otherwise, this has been a great conversation. Thanks for the time.
Yeah, absolutely. I enjoy what I do. And again, to our listeners, this is David Wells, who is the founder and CEO of Family Capital Strategy. You can learn more about him and his company at familycapitalstrategy.com. Thank you all so much for joining us, and we'll chat with you in the next episode. Tune in next time.